Hi everyone, welcome to the weekend session of ABM. In the weekend session, we are covering all the important PYQs. It can be a case study, it can be your numericals, it can be objective questions. All the PYQs, many of the PYQs which have been asked earlier. So follow the session completely, share it with your friends, like the video, subscribe to the channel. JAIIB CAIIB English Medium. Don't miss this. Okay? I'll be covering some important objective questions today for ABM. Okay? Let's start. Which of the following tools or techniques for financial statements is also referred to as pyramid method? Which of the techniques is also referred to as pyramid method? Now this is the bouncer for many of you, right? Which of them? Funds flow, cash flow analysis, common size statements and trend analysis. So which of them is known as a pyramid method? Yes, everyone. What is the answer? Which of them is known as a pyramid method? Very difficult one. Yeah. Yes. Is it this funds flow or is it cash flow? Is it funds flow or cash flow? Is it so? So the real answer is, what did you get? Let me see the comment section. The pyramid method is always D, trend analysis. Trend, studying the trends is known as pyramid method. Okay? What do you have in pyramid method? See, pyramid means what basically? You are basically calculating the different items, ratios for various periods. So trend means what? What do you study in trend? In trend you study what was it for last year, then this year, for this year. Like this you go on comparing for last 3 years. That is known as pyramid. Okay? So in exam if they ask you pyramid method, kindly note it's trend analysis. Okay? Which of the following is not included under coverage ratios? Coverage. So which of them is not included under coverage ratios? Capital gearing ratio, debt service coverage ratio, fixed charges coverage ratio and interest coverage ratio. So which of the ratios is not included in coverage ratios? Now what is coverage ratio? Coverage means which can cover my EMI. Suppose here there are various coverage ratios. First one is, let's say, DSCR, debt service coverage ratio, means whether that customer will be able to repay my installment in the next year. Only next year. That is DSCR. What is ICR? Interest coverage ratio, whether the customer will be able to repay my interest. Similarly, this fixed charges, whatever are my fixed charges, legal charges, whether the customer is able or does he or she have the capacity to pay those charges. So that is all considered under this ratios, coverage ratios. So which one is not there? Let's see. Let's see one by one. Capital gearing ratio. So capital gearing ratio means what? This you can call it as debt equity ratio. Debt equity. Capital gearing. What is my loans from outside? Okay, upon what is my loans from inside, my own money. How much loan have I taken from the bank and how much money I am having on my own. So that ratio is known as capital gearing ratio. Okay. Next is debt service coverage ratio. This I have already told you, but look at the formula. Okay. Profit plus depreciation plus interest on long-term loan upon total EMI plus interest on long-term loan. So that is taken over here. DSCR means profit plus depreciation plus interest on long-term loan upon total EMI plus interest on long-term loan, right? So that is DSCR. What is fixed coverage? Fixed charges. See, fixed charges means NPAT, net profit after tax, plus interest expenses plus lease expenses. Look at this, charges, whether the charges the customer will be able to repay. So NPAT, net profit after tax, plus interest expense plus lease expense, the whole upon. Look at this, again these two are added. Interest expense plus lease expense plus long-term debt retired, okay? Plus long-term debt retired. Retired means which have been repaid. Plus preferred dividend. So these are all added under fixed charges coverage ratio. See, this ratio is new one. It is not there in the books. Okay? It's not there too much in the books. But you have to look at it. Kindly write down the formula which is given. Okay? Write down the formula given over there. Okay? NPAT plus interest expense plus lease expense upon. These two are again added. Interest plus lease expense plus long-term debt retired plus preferred dividend. Write down this formula. And last one, you know, interest coverage ratio. That is used for your CC. EBIT, earning before interest and taxation, upon interest on long-term loan. So it's very simple. EBIT upon interest on long-term loan. Okay? So which of them is not there? So capital gearing ratio. The answer is A. This is not covered in the coverage ratios. So it is capital gearing ratio. A is the answer. Kindly note. The answer is A. Okay, this one is the answer. Not included. Okay. Got it? Next, look at this. This is a sort of case study. A salesman collects a survey on feedback of the product from every fourth customer. So he selects the first customer to be surveyed randomly, and after that every fourth customer is surveyed. What type of sampling is he doing? Now see this. This is the important chapter which you have, sampling distribution. Okay? Roughly third chapter. Okay? Second chapter. It's there. In this, kindly note, what are the various ways of sampling? There are 4 ways of sampling. Systematic, stratified, simple random and cluster. So these 4 are only there. These are called as probability sampling. There are also non-probability sampling, that is separate. That snowball sampling is there, convenience sampling is there, that we won't touch it today. But these 4 are probability sampling. One of them, at least 2 of them are asked to you in exam. So now, if somebody is collecting, see what am I doing over here? If I am the salesperson, what am I doing? First person. Then 1, 2, 3, leave it. Second person. 1, 2, 3, leave it. Again third person. Same thing. 1, 2, 3 and fourth person. So what am I doing? I am collecting every fourth person, or I am interviewing every fourth person. So what is this method called as? In the comment section, everyone. This is known as systematic sampling. Systematic. Okay? Understand the difference between all these. Systematic means sequentially, with a proper order. Stratified means what? Stratified sampling. This creates differences, means 40%, those students with 20% marks, those students with 40% marks, those with 60%, 80%, like this. We make separate groups. That is stratified. Simple random means what? Anything. I'll close my eyes and select any 10 students. Here, I'll just move out and select. That is simple random. Cluster means what? Generally, cluster is followed for regional differences or regional bifurcation. Students from Goa stand on this side. Students from Maharashtra stand this side. Students from Tamil Nadu stand here. Kashmir stand here. So regional. Okay. So got this point? The answer over here is systematic sampling. A research associate has conducted a survey for around 1500 families with respect of their water consumption pattern during the month of April. Now he wants to quickly summarize the large amounts of data collected by him using spreadsheet. Which feature among the following should be used? So now, macros, pivot table, mathematical functions and logical functions. Now he wants, what has he done? He has done a large survey. In fact, I'll give you an answer, E, all of them. Okay, E is the answer. E, I've given this option. Check this. He has conducted a survey of 1500 families. So he'll have a large data now. 1500 is a big number. Analyzing that large data is very difficult task. Okay. So he wants to quickly summarize the large amounts. Okay. Quickly summarize the large amounts. Quickly summarize the large amounts. So which feature among the following should he use? So if he wants to summarize the large data, he must use macros, pivot table, mathematical functions or logical functions. In fact, E is the answer, all of them. Because what you will be needing when, you don't know. And all these are important functions. Macros, okay, macros is for repetition. Whenever you have to repeat certain function constantly or certain process constantly, you will use macros. Pivot table, this is like the benchmark table, pivot. This is used everywhere. Copy, just you have to copy this table and put it everywhere. So that is pivot. So you can use this also. Mathematical functions, you know it, plus, minus, whatever, additions and whatever big functions are also there, logarithmic and everything. And logical functions. So all of them should be used, isn't it? So the answer is E, all of them. Prudential guidelines on income recognition, asset classification and provisions were introduced by RBI on the recommendation of which of the following committee? So income recognition, prudential guidelines on income recognition were introduced on the recommendation of which committee? Rangarajan Committee, Chakraborty Committee, Deepak Mohanty Committee or Narsimham Committee. So, because of which committee were they introduced? Very important committee this was, very important. Yeah. Think. Yes. This committee made major changes, okay, in the banking. What was it? Yeah, it was which committee? This committee was one of the major committees in the banking system. Think, which was it? It's very famous committee, very famous. It's the base of your modern banking. It is the base of your modern banking and it is Narsimham Committee. Okay, Narsimham Committee. In fact, there were two Narsimham committees, 91 and 98. Two Narsimham committees were there and both the Narsimham committees gave very good recommendation. Because of 1991 committee, our country, we brought the private banking. All these new private banks which you see, HDFC Bank, ICICI Bank, because of this 91 Narsimham committee, they have come in. Then in 1998, again Narsimham committee was set up and it gave the freedom to insurance sector. Okay, means the major changes in the insurance sector, airlines were made in 1998 and that was given by Narsimham committee too. Okay. So all these guidelines were brought because of this Narsimham committee. The outstanding balance in the account based on drawing power calculated from stock statements older than dash would be deemed as out of order. Oh, very important. So outstanding balance, so basically what does it mean? What is the period above which the stock statement submitted by the customer or the stock details submitted by the customer are outdated? Simple meaning. What should I consider? Suppose if I give you a stock statement tomorrow and that stock is 2 years old. So is that stock of any use to you then? If it is 2 years old, it means what? If some stock is 2 years old, it means that stock is dead stock, right? That stock is dead stock. So it's of no use to you, isn't it? So which one? What is the criteria? From where do I say this stock is of no use? Is it for 1 month, 3 months, 6 months and 12 months? It depends. See this. Again, every bank will have a specific criteria of their own. But generally what is accepted in bank? Generally accepted in bank is 6 months. Up to 6 months you can consider the stock as okay type. But again it depends on the business. Suppose if I am having a vegetable vendor, 6 months stock is of zero use to me. If I am an agriculturist, I am a farmer, then 6 months stock, I am having onions, 6 months stock is of zero use to me. That's why I said, depends on the company and the bank, specific bank's guidelines or board of directors directives. But generally it is considered as 6 months. Okay. Next. Among the below mentioned, which of the following is correctly matched? Correctly. Look at this. Now look at this. The point over here is you might be feeling that all of them are correct. Executive director, the role, or this independent director, internal control. But you must know, here we have to match the following. Okay. It may be this and this may not match. So this is what you have to check. So executive director means member of the board who does not have management responsibilities within the bank. Okay. So member of the board who does not have management responsibilities does not. He is an independent sort of means this director is sort of he is not directly liable to the management. Independent director, executive member of the board who does not have management responsibilities, again the same. Internal control system, a set of rules and controls governing the bank's organizational and operational structure, including reporting processes and functions for risk management, compliance and internal audit, and all of the above. So which of them is correct? Do you mean to say that executive director does not have any responsibility? Independent director does not have any responsibility? It can't be the case. Okay. When you are on the board of directors of any company or any bank, whenever you are on the board of directors of any bank, you always have a responsibility. Okay. Whatever decisions you do, you give, will affect the overall banking. Okay. So that's why executive director, independent director, these are false. And this one is true. Internal control system, a set of rules and controls governing the bank's organizational and operational structure, including reporting process and functions for risk management, compliance and internal audit. Now this is so true. What do you mean by internal control? Internal control means I'll always focus on 2-3 parts. One is compliance, second is business. So leave aside business. Right now we are not discussing business. So compliance. Compliance will be what? Compliance will be related to your internal board of directors policies, BOD policies or SOPs, plus your regulatory body means RBI. You'll have to follow the compliance in these 2 parts. Plus any other body means RBI means not only RBI, it can be some. You can have the compliance related to SEBI also. You can have the compliance related to IRDA also. So all the bodies. So internal control means what? It is having the set of rules and controls governing the bank, organizational and operational structure. Again, operations. So here you have to see to it that the compliance material or the compliance process is followed by the staff also. The staff needs to be well educated about this, trained about this. Otherwise, having the compliance only on paper is of zero use. Got it? Having the compliance only on paper is of zero use. So, reporting process. Nowadays, we have all this online reportings. Okay? RBI has also made online reportings under various platforms now for risk management and compliance and internal control. Okay? So, this is the true one. True. Okay?